Greetings, and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by Maidsafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 29th of June, 2018. Today I'm joined by my co-host, Mike. So let's begin. Welcome, Mike. Thanks for joining the show today.
Another day, another time for another show.
Yes, it's an interesting, we've had a fantastically horrible week, but today it's going nuts. We've got a line that is so vertical. What do you say?
I don't know.
It's so vertical that
it's nice to see instead of going sideways and down.
Yes.
So, nice to see it go the up direction instead of the down direction and stuff. Testing bottoms, and we found out where it is, and now that we've tested it and double-checked it and made sure that that's the bottom, we're using that as a springboard to go back up. So.
I don't know what's going to happen. It's a bit radical. And it's so across the board. I mean, so was the drop down that we had this past week. So across the board. I mean, there were a few that resisted, but today it's just going the other way, and it's a bit weird to me. A bit weird. I worry that the bears are still hungry, so I just keep your eye out. But who knows? It could be a new beginning.
Maybe the bears ran out of food and they're dying.
Well, the small bears, I don't know. I think the bears have been doing quite well because bears do well in a bear market.
I suppose.
I think so.
Yeah.
So I don't think. Yeah, long term the bears are not done, but today we've had a reprieve, so that's nice. Let's have a look here at the top ones here in the last 24 hours. Oh, TenX. Right at the very top, 62.23%. TenX is going nuts. That is the one moving the highest in the top 100 today. The next below that is Power Ledger with only 37.78%. So, I mean, TenX is just, what is going on with TenX? Maybe they've had some news. I'm not aware of any, but if anybody knows, please let me know. It's interesting. All right, well, let's get on to the looking at the market cap. 7 days. See, at the beginning of the week, we were at 259 billion-ish. We had a big dip down to 235 billion, and then we came back up, and then back down, all the way back down to around the same amount.
Yeah, that's like what I was saying. It looks like it's gone and tested the bottom a couple of times.
Yeah.
And
not
that where it's at now is anything, amazing or spectacular, but it's up 20 billion from what it was earlier today, so we got that going for us.
I haven't seen it this vertical in a long time. That's a bit scary. I'm glad it's not going down, but I always worry about these shock moves. All right, let's have a look at Blocktivity now. You can see Steam at the top. Well, BitShares has dropped down a bit. It was higher earlier. Ethereum at number 2, BitShares number 3, EOS number 4. EOS continues to climb up the ranks. Then Bitcoin at number 5, Ethereum Classic number 6, Golos 7, Litecoin 8, Dogecoin 9, Dash 10. Pardon me. My phone keeps going off. I'll just turn the thing off completely there. It's a bit of a nuisance. Yeah. So interesting to see some of the changes happening. Well, I guess we can get on into the news then. Hedge fund sell-offs could artificially lower Bitcoin prices, predicts Blockchain VC. And this is interesting. And when I started to pick out these articles last night, I was thinking, gee, the market's all pretty bearish. Why is it so bearish? And I thought, oh, this could be part of the explanation. But now today it's skyrocketed back up. So it's like maybe I picked the wrong articles for today's show. I should have looked for some really bullish ones. So blockchain venture capitalist Spencer Bogart forecast artificial Bitcoin price suppression on June 25th as hedge funds near the end of their lockup period. Speaking to CNBC, Bogart, who earlier this week claimed Bitcoin would be above 10,000 by the end of the year, warned over forced selling, which would drive markets lower. Quote, if we go back to the summer of 2017 when crypto prices were booming, there was about 100, 200, maybe 300 new crypto hedge funds that were formed, he told the network. Bitcoin successfully rebounded after trading under 5,800 Sunday, the widely predicted drop below 6,000 coming despite news defunct exchange Mt. Gox had ended the giant sell-offs, which had previously taken prices lower. Hundreds of hedge funds began trading 1 year ago as Bitcoin began markedly increasing in value. Bogart explained nonetheless, remaining buoyant about the future market, implying any suppression would be temporary. Well, we've had quite a bit of suppression this month. Quote, most people are going to wait for lower prices. Most people that are going to wait for lower prices will end up paying higher prices than they are today, so I think the right move is to not try and time the market and to try to average into it. I'm not sure if that would have been a good move or not in the case of this past month, but in any case, that could be that some of the dropping was closing out of particular hedge fund accounts. All right, our next article, cybersecurity analysts find Tether double spending vulnerability. Chinese private cybersecurity firm SlowMist has found a double spending vulnerability in Tether. SlowMist states in a tweet that they were able to send USDT to an unnamed exchange without correct field values on the transaction. This means that individuals may be credited for tokens without actually having sent them, leading to a double spend. Following the tweet from SlowMist, a founder of OmniLayer, the platform on which USD Tether was created, offered an explanation to the error. Quote, it appears that what happened here is that an exchange wasn't checking the valid flag on transactions. They accepted a transaction with valid equals false, which they should not have, and then the second double spend transaction had value equals true, which they also accepted. Unless I'm missing something, this is just poor exchange integration. Well, in any case, other exchanges could have done this too, and this has been going on for a while now, apparently. The world's second largest exchange by trade volume, OKX, posted a statement regarding the error. The exchange said it performed a series of examinations when it was notified of the loophole by SlowMist, after which it determined OKX is, quote, not exposed to the vulnerability, end quote. According to Crypto Medication, the double spend vulnerability carries serious implications as, quote, it is possible that this could have been exploited ad infinitum. Crypto Medication adds that it seems to be an exchange problem more than a Tether issue, end quote. Earlier this week, Tether issued 250 million new tokens, which are allegedly backed one for one by the US dollar. Tether had previously released 300 million tokens at the end of March, which led to small price increase in Bitcoin. Tether also made news earlier this month when a study from the University of Texas alleged that USD Tether was used as an instrument for Bitcoin price manipulation in 2017. So, I'm very dubious about Tether and its parent company Bitfinex these days. I'm a bit concerned about them. I recommend people do the research and kick the tires. I don't know. I'm not going to hold Tether myself anymore. There's now alternatives as well, so have a look into that. Our next article, Germany's Solaris Bank to serve blockchain and crypto companies. Crypto and blockchain companies from the European Economic Area can now conduct business through the fully licensed German Solaris Bank. With its blockchain factory, Solaris Bank offers its customers so-called blockchain company accounts, which can only be opened in fiat currencies. These accounts are intended for the banking needs of blockchain companies, which are still not met by most German banks. In addition, with the automated trust account, the banking platform provides a service to facilitate the purchase and sale of fiat currencies by global cryptocurrency exchanges. Quote, "We see it as a chance to work with innovative companies on the future of financial industry. We believe in the future of blockchain technology and the future of companies that rely on this technology. At the same time, as a bank licensed company, we place great value on legal and regulatory permissibility and scrutinize possible partnerships." So I don't know. Maybe this is part of the reason 10x. I think Monaco's going higher too, but I mean everything's going higher at the moment. So maybe this is something to do with it. I know that having a banking license, being able to issue Visa and MasterCards and that sort of thing, that's what 10x and Monaco do. So perhaps this has something to do with it.
Yeah, that's going to go and it's going to go and make a big difference when 10x is capable of issuing their own cards. That'll get them out of the issue that they had earlier where the 10x card issuer was no longer able to send out the cards. But maybe this news is something that brought that into account.
Could be. Maybe they've got a deal with the bank as well. I don't know. It's interesting to see. I mean,
they are looking.
Bit strange seeing how high they're going today. So I think maybe there's some inside news, maybe inside trading going on there. I'm not against insider trading myself.
Yeah, they are looking for their own banking license so that they can essentially act as a bank. And I'm not sure if that's part of their. I'm not sure if that's part of their banking license. I know they're looking for a banking license, and I'm not sure if the issuing the cards is part of that license or not.
Yeah.
I'm not knowledgeable on that, but it's worth taking a look at, I think.
Well, maybe we'll hear something in the next few days. It just seems like something's going on there. Our next article, ING Bank Survey reveals interest in crypto will double in near future. Research company IPSOS, on behalf of ING Bank BV, has conducted a study on how cryptocurrencies are perceived across Europe, Australia, and the US, which reveals that interest in the technology is expected to double in the future. While only 9% of respondents own crypto, 25% say they will own some in the future. The highest percent, 18% of crypto ownership, is reported in Turkey, while the lowest, 4%, is in Luxembourg. That kind of surprises me. I would think it would be the opposite or something. The survey is reportedly conducted several times a year and takes into account gender, age, and population in each country, while consumer figures are an average. The latest study, which was carried out between March 26 and April 6, 2018, compared 15 countries with about 1,000 respondents surveyed in each. According to the study, 66% of Europeans have heard of cryptocurrency, of which 77% are men and 55% are women. 35% agreed that crypto is the, quote, future of spending online, end quote, while 35% said it will increase in value in the following 12 months. The share of awareness of crypto is equal to or exceeds 50% in every surveyed country, with the highest rate in Austria, 79%, and Poland, 77%. In the US, 57% of respondents have heard of cryptocurrency. Fewer than 1 in 10 in Europe own crypto, with similar figures in the US and Australia. The survey revealed that people in Europe who are mobile bankers are much more likely to own crypto, 12%, than those who are not mobile bankers, 4%. So mobile bankers are people who have their banking app on their phone. The study revealed that most respondents recognize crypto as a riskier investment than cash, real estate, government bonds, or the stock market. Among preferred sources of information, one potential Bitcoin investments in 11 of 15 countries, people chose specialist websites. Respondents from Spain, France, and Luxembourg preferred to rely on financial or bank advisors, while Italians said they would prefer both specialist websites and professional advisors. Earlier this month, consulting firm Capgemini found in its World Wealth Report 2018 that interest in cryptocurrencies has notably grown among high net worth individuals. According to the report, nearly one-third of surveyed individuals expressed high interest in cryptocurrencies. Interest in crypto was much higher among younger investors, with 70% of respondents under 40 attaching great importance to having their wealth managers provide crypto information, compared to only 13% of respondents 60 and over. I think we reported on that Capgemini report a couple weeks ago. So, yeah, that's hugely positive news, really, that survey. I think once things settle down a bit, we're going to start to see more investment come into the fray.
This is one of the first articles that I've seen that actually goes and addresses what I call the two major S curves where crypto is concerned. The first one is knowledge of the cryptos, and then the second one is the adoption of the cryptos. And in this article, it actually references both of those. The awareness of crypto, Austria at 79%, Poland at 77%, followed by the fewer than 1 in 10 owned crypto. That's the adoption. And if you go and look at the S curves of a lot of the adoption and the explosion of a lot of different technologies in the past, there's a slow run up, and then there's where it turns and goes vertical as everybody, either becomes aware of it or takes part in the new technology. And while we're getting pretty significantly up the S curve on awareness, the adoption is still low enough that, in my mind, once it does the curve and starts going vertical on the adoption, that's when the largest chunk of profits seem to be made, as the little investments that you make at the beginning of an adoption curve turn into significant investments by the time you're up a fair amount on the vertical part of that
Yeah.
S curve, before it plateaus when you get up at the very, at the higher end, 80 to 100% of adoption.
Yeah.
So, with 12%, being the amount that the amount that the mobile bankers, people who are aware of banking technologies and new things in that, I think we're going to go and see a lot of interesting things when a lot of people start finding out. It's like, okay, we need to figure out how to go and get some of these cryptos to have what savings accounts that they have and their investments, and they decide that that's something that they have to have some of. And the easier it is to go.
It's easier to, I was about to say, just as it gets easier to get into it. I mean, as these apps and exchanges start to build phone apps and make them, more accessible and easier to use.
I'm thinking that it needs to be a combination of both ease to get into and out of. And the more seamless it is to go and exchange fiat for, your crypto of choice, the easier it is to go and swap in and out, the more adoption there's going to be.
Well, could you imagine if something
easier.
like if a company like Binance started offering credit cards or debit cards sort of functionality? I mean, that would
just the prepaid. Yeah. And that's currently what companies like TenX are doing. And I think, TenX is the one in my mind, granted I am a person who owns a reasonable chunk of 10X's, so, take it for what it's worth. But what I saw in it when I made my investment in the company was there is a major hurdle that needs to be overcome with crypto. And the primary hurdle is, how easy is it once you have money in? And, once you have money in, how easy is it to get that money back out? And 10X is a company that once they are, up and running, firing on all cylinders, and, the 10X cards are being used on a day-to-day basis all the way around the world, you're going to see that one of the major hurdles with crypto, which is having a easy way to get your money back out without having to go through, the hassle of having your crypto sold onto the open market by a secondary concern such as Coinbase in America, or, other exchanges where you are able to go and exchange cryptos for, the fiat of your choice and have it deposited in your bank. Once you don't have to do that step, and you can essentially go straight from a crypto account and take your card like 10X or Monaco or WireX or what, take your pick, and you go and run it through a Visa, MasterCard, point of sale terminal, and pay for your coffee or pay for your groceries or pay for your gas or petrol, depending on where you're at. Once you're able to go and do that, and it's a seamless transaction from your point of view as a owner of crypto who wants to pay for crypto or pay for, their normal purchases with their crypto coins, it will revolutionize the way that crypto is seen. And I have, a handful of friends who just haven't taken the time to learn, the amount that Tyler and I have. And, when I go and pay for breakfast with my, with my TenX card, and it's like, yeah, I just paid for that with Ethereum, or I just paid for that with, Maidsafe, or I paid for that with Bitcoin. Doesn't matter what I put into to load the card. The net effect is it paid for breakfast. And that's going to go and drive a major turn in the adoption when people begin to see crypto as, I can pay for anything that takes a card.
Yeah.
And once you can do that, you're off to the races.
Company really gets a strong foothold with a credit card, the debit card sort of offering. When I mean foothold, I mean whichever company succeeds in getting a lot of customers who actually use it, they're going to be really hot property. Another company is going to swoop in and work to buy them out, And once something like that is really integrated with a crypto exchange, and I don't think TenX is an exchange, but I think, if something like that gets integrated with an exchange, then you got everything all in one place. And I would suggest that TenX or Monaco, whichever one of these, or WireX, which I don't know all of them now, but whichever of them becomes the most successful, they're going to be a really hot property. Other companies are going to be looking at buying into them. Anyway,
well, that's something that could be a point for a future conversation.
Yeah.
But 10x has, you were talking about the exchanges, and that's part of what 10x is planning on doing. It's in their white paper for the Comet network, and that's basically a exchange that will allow you to convert seamlessly from one crypto to another. Really, realistically, the same way that most exchanges do. And I think that's one of the things that the Comet network is designed to do. And again, do your research, make sure that what I'm saying is the correct thing. But as I understand it, that's one of the things that Comet is looking to do, which I'm really looking forward to the whole package and stuff. So
I'm not aware. I'll have to look into that. I'm not sure. Is that anyway? We've probably dwelled on that long enough. Let's go to the next article. Blockchain.com, formerly blockchain.info, introduces institutional investment platform. UK-based crypto data supplier and cryptocurrency wallet Blockchain.com has recently launched a comprehensive institutional platform, Blockchain Principal Strategies, according to a blog post today on June 28th. Blockchain.com claims the new platform will provide secure and unparalleled access to markets, services, and research for institutions, family businesses, and retail investors. Blockchain.com co-founder Peter Smith commented that the new institutional-grade platform aims to provide maximum security while investing. Quote, BPS provides clients the opportunity to invest in digital assets with the same peace of mind and security that has become synonymous with the blockchain name, end quote. BPS offers a number of trading and research tools, such as an over-the-counter trading desk, a smart order management system, custom portfolio view, risk metrics, as well as access to a research team that staffs Garrick Heilman, not sure if I'm pronouncing his name right, the University of Cambridge's first cryptocurrency academic. Woo-hoo! Hired by Blockchain.com in May this year. The over-the-counter services through BPS will be managed by a team of experts from Goldman Sachs, JP Morgan, and UBS. So, launched in 2011, Blockchain.com is now, formerly Blockchain.info, is now one of the most popular crypto wallets with more than 25 million registered wallets and $200 billion worth of assets transacted in 140 countries. Originally launched as a data supplier for Bitcoin transactions, the firm now offers a crypto wallet for Bitcoin, Bitcoin Cash, and Ethereum. Earlier this year, Blockchain.com announced the launch of Bitcoin trading for 22 states in the U.S. According to Blockchain.com's statement, they will continue adding new services for U.S. users, such as trading services in ETH and Bitcoin Cash. I didn't know they were doing all that stuff until I saw this. I mean, I've been to Blockchain.info many, many times over the years, and I've probably got at least one wallet over there that I don't use anymore. But they're branching out and expanding. That's really interesting, and getting into the institutional investment. That's I like to see that sort of thing. That's going to attract more institutional investors into the fray, and that's really what we want to see for the growth of cryptocurrency in general. Mm-hmm. our last article, this one's from Zero Hedge. 2018 is shaping up to be the tipping point for institutional embrace of Bitcoin. And along the same lines as the previous article, a few years ago, I asked a friend at a major Wall Street trading. This is authored by Omid Malakon, an op-ed via the New York Times. So a few years ago, I asked a friend at a major Wall Street trading desk if her colleagues ever talked about cryptocurrencies. She responded that one person would occasionally bring up Bitcoin, then the room would clear out. that would have been the fear, I think. Maybe subconscious fear. This was during Wall Street's Bitcoin is stupid period, which fell between the initial I don't understand it era and the more recent it's a bubble phase. Since the advent of the first cryptocurrency 9 years ago, professional money managers have almost universally dismissed it as a potential investment. Although many have come around on the power of the underlying technology, cryptocurrencies have often been ignored or ridiculed. What's that famous Gandhi phrase? First they ignore you, then they fight you, then you win. I think this is
That was funny.
probably
I like that.
something to do with that. Last year, as the price gains of cryptocurrencies like Bitcoin and Ethereum were generating daily headlines, some fund managers went on the attack, calling the sector a pyramid scheme. Although they probably really felt that way, they might have also been a little jealous. Just a little.
Seeing as the crypto market has eclipsed most of their investments over the profitability last year, I can understand it. So
yeah. Although they probably really felt that way, they might... Oh, I repeated that. Wall Street money managers are not used to standing on the sidelines while amateurs get rich off something the pros don't really understand, or worse yet, own. This article's hilarious. For the crypto faithful, on the other hand, it's always been a question of when, not if, the rest of the world catches on. Their faith, despite the volatility, has put them on the right side of a powerful investment thesis, one best phrased as a question. What happens when institutional money managers who collectively control most of the world's investment capital enter a new asset class for the first time? The answer lies in basic math. Institutions control so much money that they own $500 billion worth of Apple alone. And that's just one stock within a single asset class. If all the hedge funds and family offices out there decided to commit a fraction of that capital to a diversified portfolio of cryptocurrencies, they may double the size of the sector. I think that's the minimum.
I think it's a lot larger than that. I think that's underestimation.
Yeah. He goes on to say, I've been making that argument to friends who work in institutional finance for years, but they've always brushed me off, and for good reason. Contrary to what an outsider might think, people who manage other people's money don't base their decisions on how to maximize returns. Their first consideration is whether they could justify their actions should something go wrong. It's very true. I remember back in the day, I worked for a big corporation. There was an IT department there, and one of the things they would always say, well, you don't get fired for buying Microsoft products. It's basically, they're the standard, if you go and you buy something that's not from them, not from, one of the bigger companies anyway, then, it's just a matter of, I guess, if something goes wrong and you're using something that's not very standard, then you're going to look a bit like a fool and you're going to risk your job. So that's a typical way that, unfortunately, it really hinders a lot of adoption in new sectors and building up of competition in the markets. But in any case, that is an unfortunate predicament that a lot of people are in when they're in a lot of these jobs that they're in. So I'll go on now. This is a smart way for individual managers to make investment decisions, even if the combined effect is a lot of groupthink and the familiar cycle of booms and busts. Traders who lost money in mortgages in 2007 still have a job today because most of their colleagues also blew up in that trade. Yet that attitude is one reason no career-minded professional has wanted to be the first to dip toes into crypto, or the second, or the 12th. Not if they wanted to have a long career. But with each passing month, as more people talk about Bitcoin and more conferences are held where more products aimed at institutions are introduced, the barrier to entry gets a little lower. Every chain reaction starts small and needs the help of at least one catalyst. The adoption of the crypto asset class by institutional investors has recently enjoyed several, the biggest of which is the introduction of infrastructure that solves the crypto custodian problem. Since blockchain technology gives cryptocurrencies certain physical properties, storage is a significant issue. An institution that invests in stocks doesn't have to worry about a hacker infiltrating their servers to steal shares, but in crypto, that kind of thing happens all the time. Several solutions to this problem have been introduced by reputable crypto companies in recent months, including hardware products that help institutions secure their own cryptocurrencies and a storage service where a third party does it for them. Then there are the recently introduced Bitcoin futures at the Chicago Mercantile Exchange and the Chicago Board Options Exchange. These products allow institutions to gain exposure to crypto markets while bypassing the storage issues altogether. As an added bonus, their creation signaled a much-needed nod of approval from financial regulators, as did Goldman Sachs' decision to help clients trade them. None of this means that the world's pension funds and endowments are about to dive in, but for the bullish thesis to work, they don't have to. Just the fact that they will start to consider the option is a major change. Throw in a sputtering stock market and a stalled bull market in bonds, and the argument becomes even more compelling. On Wall Street, the only sin worse than being the first in a bad trade is being the last in a good one, or what crypto enthusiasts colloquially will call FOMO, or fear of missing out. That fear drives a lot of investment booms, and nobody knows that better than the biggest stewards of institutional money, hedge funds. 20 years ago, most people had never even heard of alternative assets. Then the dot-com bubble burst, leading the Federal Reserve to slash interest rates, and it was no longer possible for pension funds and endowments to hit their annual return targets with only stocks and bonds. Within a few years, everyone was talking about the importance of allocating some capital to so-called absolute return strategies, and the hedge fund boom was born. We are still years away from when institutional investors will fully embrace crypto as an asset class, but 2018 is shaping up to be the year of the tipping point. So, there's a lot of really good points in that article. That's why I thought it was important for the show. I recommend people read it themselves, get an understanding of what's happening, because we are the tipping point is at hand. If it hasn't happened yet, it's very close. I've been going over articles for months now, showing how institutions are getting more involved and how different people who have formerly worked for institutions are getting involved in a big way. And they're just going to start pulling in more and more people that they know within the traditional places and dragging capital with them. And it's inevitable. I don't know how much is going to come in. It's going to be small at first. And how big it gets, I suppose, depends on how much the existing markets are actually transformed by blockchain technology. I mean, we can see Goldman Sachs and a lot of these are already dipping their feet into that pool, trying to figure out ways that they can implement it for their own uses. One article I didn't include this week is about Alibaba and how they've developed a blockchain solution for remittances. And we can see this happening more and more. And once this starts to really happen and we see these tokens start to turn up on some of these major tokens from these major companies start to turn up on exchanges, that those can become really stable kind of currencies, assuming they're not, kind of semi-private ventures between companies that aren't actually listed on exchanges. But I reckon that inevitably some of them will be, because why not? And it will lend really a lot of support to the whole sector. Anyway, off the news now, on to our last bit, the Maidsafe development update for June 28th. Here are some of the main things highlighted this week. Number one, there was a fantastic series of 3 articles on Parsec by Flat Out Crypto on Medium. You can check them out. The links I will put in the show notes as well. Number 2, the Safe Client Libs team is releasing version 0.1.0 of the Safe Crypto library on Crates.io. The first release includes the mock version of the crypto primitives. And number 3, the routing team has been focused on finishing the implementation of Parsec for the first milestone, a static network with integration tests and an example. All the features have now been implemented, and we are starting to see some tests pass successfully. So that's awesome news. It's only those 3 highlights this week. I might just read some of the marketing bit here in more detail. The marketing team has spent this week working on a number of fronts across various projects. Work has continued on the website, which is now nearing completion, and also preparations for the Decentralized Web Summit, which takes place in San Francisco in only a month's time, are now starting to come together. In amongst all the usual weekly tasks, Diguedes, it's a user ID on the forum, is also building out a plan for the evolution of the Dev Hub as we seek to make this as useful as possible for all. There was a fantastic series of 3 articles on Parsec by Flat Out Crypto and Medium. Again, I'll link those in the show notes. It's in 3 parts. It's really reassuring to see such a substantial and well thought out piece of work from someone who isn't connected with the project, so we'd encourage you all to spend time reading through it and to give your support if you agree. Finally, another reminder, the first meeting of the SAFE Network Chicago takes place on Saturday the 21st of July, run by Sotros25. That's another user ID on the forum. You can sign up to the group or to attend the event here. And there's a link. I'll put that link in the show notes too. So there's much more to the update. A lot of details on user experience website design, safe browser authenticator and API, and safe client libraries, and routing, and Crust. So this is a huge update, really. There's a lot of detail to it. So get in and learn more about what's happening on the safe network development. It's awesome. So, have any final words to add, Mike? How do you?
Just making progress like usual. A little bit every week.
Yeah. Well, that's all we have for today, folks. I'd like to thank both our viewers and my co-hosts for joining me today. We hope you found the episode informative and helpful. Please subscribe, like, comment, and share video with others. Smash the bell button. Tune in next week for another interesting episode.
Have a good one, everyone.
Bye.